Welcome. In this video, Zbcn coin uptrend is starting. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the notable formations on the chart is a clearly defined and technically significant descending channel structure. These types of patterns are typically seen during downtrends and represent price moving in a fluctuating manner within a specific range. A descending channel consists of upper and lower bands, and price oscillates between these two bands. This structure provides valuable information for both technical analysts and investors, as movements within the channel can create clear opportunities for short and medium-term trading strategies. In the current scenario, the price has begun to rise after reacting upward from the lower band of this descending channel. As this upward move continues, it is now observed that the price has reached a level close to the midline of the channel. The midline is generally used to gauge momentum within the channel, and is also considered an important area where short-term resistance support shifts occur. When the price reaches this zone, it typically either moves sideways for a while or breaks out with momentum toward the upper band of the channel. The current outlook is quite positive. The rise toward the midline suggests that buyers are re-entering the market and the influence of sellers is diminishing. If this positive sentiment continues and the price closes above the midline, the path toward the upper band of the channel will likely open up. From a technical analysis perspective, this is a strong signal for both short-term traders and investors anticipating a trend reversal. Additionally, the increase in volume as the price approaches the midline is also notable. Such volume-backed moves typically increase the likelihood of a breakout. This is because rising volume indicates growing confidence in the market and an increasing appetite for buying. As a result, the midline becomes more than just a point of resistance. It becomes a level that could be decisively broken. If this happens, a move toward the upper band of the channel becomes a highly probable scenario. The upper band of the channel represents the strongest resistance area in this structure. However, it should be noted that once the price breaks above the midline, this resistance usually becomes the next target. When analyzing previous price reactions within the channel, it is clear that these bands have been technically respected, and price has consistently responded to them. This increases the validity and reliability of the structure. Moreover, the price has currently reached a level that is significant not only technically, but also psychologically. Zones like the midline represent uncertainty for investors. But once these areas are broken to the upside, optimism in the market grows, and sidelined buyers often step in. This can lead to stronger moves toward the upper band. If the price breaks above the midline and successfully retests it as support, the area up to the upper band becomes the next technical target. Reaching this level would not only be a positive sign in terms of price action, but also in terms of investor psychology. It would be proof that buying opportunities can still arise even within a declining structure. In conclusion, the current price level signals a technically exciting zone. This upward movement within the descending channel has begun to attract investor attention. Continued movement above the midline could trigger a rally toward the upper band of the channel, marking a critical phase for both short-term gains and potential trend reversal. However, we can't base decisions on channels alone. Let's take a look at the other metrics as well. Stay tuned. One of the most important structures on the chart is the recent bottom area formed by the price. This zone holds great significance not only from a technical perspective, but also in terms of market psychology. In financial markets, bottom levels are known as areas where investor confidence is renewed, downward pressure weakens, and buyers start to become active again. Currently, the price is trading near a level that was previously tested. However, the fact that the price did not break below this level upon its second approach can be seen as a very encouraging sign. If the price responds upward from this current bottom level without falling below it, and then continues to rise by forming a higher low, this is defined in technical analysis as a higher low formation. This structure is often considered one of the early signs of an uptrend. That's because forming new lows above previous ones suggests that buyers are stepping in earlier and sellers are losing strength. This is a strong signal that prices could move upward in the medium to long term. Additionally, this can be interpreted as the first step in a potential trend reversal on the chart. In technical analysis, a pattern of higher lows and higher highs forms the foundation of a classic bullish trend. So if the price begins to move upward from its current position without falling below the existing bottom and creates a higher low, it may start signaling a trend reversal to investors. In this scenario, many traders will be on alert to open long positions. The ability of the price to hold this critical bottom level also indicates the formation of a strong support zone, In technical analysis, support levels are areas where price halts its decline and reacts upward. If this support zone is tested multiple times and remains unbroken, it is considered a strong support. Price action staying above such a level generally has the potential for upward movement. Therefore, maintaining this level is a key factor in keeping bullish hopes alive. Notably, when compared to previous downtrends accompanied by rising volume, this time the decline has occurred with lower volume, which indicates weakening selling pressure. This increases the likelihood that the bottom level will hold. If rising volume is observed in the next upward move, it will show that buyers are beginning to regain confidence in the market, making a steady price increase more likely. With this development, potential formations such as a double bottom or higher low may also emerge. These formations are strong reversal signals typically seen at bottom levels and offer clearly defined upside targets. If higher lows form, these patterns can be strongly triggered, with technical targets including channel upper bands, resistance zones, or previous peaks. Another important point is that investor expectations are also changing during this process. If market participants begin to believe that the price has bottomed out and a new uptrend is starting, this belief can create a self-fulfilling effect. In other words, as investors start opening positions from this level, the price gains upward momentum, which in turn draws more investors into the market. As a result, a positive feedback loop begins. In summary, the price holding its current bottom level and forming a higher low is a very positive technical signal. It indicates that market dynamics are beginning to shift and buyers are preparing to take control. If this scenario plays out and the price starts forming higher highs, it would suggest that the move is not just a bounce, but the beginning of a new trend. One of the most important technical indicators on the chart is the 200-day exponential moving average, which is one of the most frequently used tools by investors for analyzing long-term market direction. This average is like the heartbeat of the market. Being below this level generally indicates a continuation of the downtrend, while being above it signals the beginning of an uptrend. Currently, the price is approaching this key level and preparing to test it. If this resistance point can be broken, it may mark the beginning of a significant acceleration in price movement. In particular, maintaining price above the 200 EMA is considered a strong signal in technical analysis that the trend has shifted upward. This is because the average is closely followed not only for short-term speculative moves, but also by institutional investors and professional traders. Therefore, a breakout above the 200 EMA generates a buy signal for many investors and creates a positive sentiment in the market. The fact that the price is now nearing this level indicates that a critical technical threshold is being approached. Especially when looking at past price movements, it is observed that after touching the 200 EMA, the price has either been sharply rejected or initiated significant rallies following a strong breakout. As such, this level carries great importance in light of historical behavior. If the price manages to break this level to the upside and starts closing above it, the overall market direction could shift entirely. However, it's not just the break above the 200 EMA that matters, but also the price behavior that follows. In some cases, the price may temporarily exceed this level, but then fall back below. That's why sustained movement above the 200 EMA, meaning at least several daily closes above this level, is crucial for confirming the uptrend. Once this stability is achieved, investor confidence increases, and more participants may start taking long positions. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.